$100 silver. The thought could soon become a reality. We have a lot of data to look at today. We have a lot of interesting stories and developments coming up this week that are going to impact the silver and gold price, and I think continue to put us on the road to much higher prices, not only for silver, but also for gold. Let's start by taking a look at this piece of data, which points us toward the amount of paper silver being traded on the electronic exchanges. Our friend the Dude, on Friday of last week, when silver went above $42 per ounce, the paper silver market traded almost 400 million, 383 million paper ounces. The paper markets are in a state of, let's say, friction right now, a state of imbalance. And on top of everything else happening in the precious metals markets, we got to keep a close eye on what develops with them, because the big people that analyze it closely are throwing up a lot of red flags. We're going to talk more about the COMEX in a little bit, but let's talk about $100 silver, $77 silver. We're going to go out next to the Silver Academy, and they quoted a chart here from a guy named Grady. Triple digit silver by Christmas. That's a tongue twister. The surge that shocks the world. Okay. Grady states, big patterns lead to big moves. Getting in before the general public is always key. Now, trying to break above the blue line could see $60 to $70 on the breakout. Again, this is the epic, the mother of all legit looking probable cup and handle patterns. And as you can see, on this pattern, let's draw it quickly here. Here's the cup, right, going all the way back to 1980, all the way to 2011, and here's the handle. Here's where we're breaking through, and we are doing it as we speak. It's going to be super interesting to see what happens in the markets this evening, Sunday night, when the gold and silver markets open. In green, this is full of great information. Silver finally smashed through 42 an ounce, an explosive move that has utterly changed the investment landscape and signaled a global financial shift of historic proportions. This tidal wave isn't simply a speculative surge. All indicators point to a relentless, self-feeding silver rally destined to catapult prices toward $77 and then with breathtaking speed into triple digit territory in red. And again, guys, triple digit territory is $100 silver. There's no stopping it. The time for waiting is over. The silver shortage is now is a crisis, and only action today will preserve and multiply tomorrow's wealth. Man, there's a lot in this article, okay? The cause is as urgent as it is clear, a catastrophic mismatch between the world's dwindling physical silver supply and its insatiable demand. Bloomberg confirms the London one-year silver lease rates have blasted above 5%, while on September 4th, the LBMA's Bruce Imakuzu reported a London one-month lease rate skyrocketing to an extraordinary 6.4%. Skyrocketing lease rates signal the panic behind the desks of bullion banks and the desperation brewing in the heart of the London market. The paper claims are crumbling. Industrial giants, sovereign funds, and retail investors are scrambling for real metal, not empty promises. In yellow, industrial silver demand alone now consumes 83% of global mine output compared to just 51% a decade ago. A few more things. Man, there is such a great story for silver right now. Private investors are draining the London Bullion Market Association vaults, driving lease rates to all-time highs and exposing the fatal shortfall in deliverable physical silver. And the ironic part, the paradoxical part, is that on the retail side in the United States, there's an overabundance of silver. But guys, everywhere else, and the critical thing to remember about that is that retail demand level, investment level from the United States, it's a player in the overall demand picture, but it's not the 500-pound gorilla, which is the industrial demand. So just because we can go to our local coin shop and the shelves are full of available, sovereign coins, bars, all that good stuff, does not mean that under the surface there's not a massive imbalance that is brewing. Fiat's last stand. The Fed trapped in insurmountable debt and evaporating global trust. We're going to look at the debt, U.S. debt clock here in a second, is presiding over the death spiral of fiat currency. The monetary system is a pyramid built on IOUs and digital phantoms. Aye, aye, Captain. Here we go. The silver rocket. Next stop, $77, then triple digits. Prior to Christmas 2025, yes. And finally, the chart has broken every technical ceiling. $42 is just the launching pad. As resistance evaporates, silver is primed for a relentless assault towards 60, then $77 before the volatility of silver physical panic buying drives the price into a euphoric bubble. Triple digits are no longer a fantasy, but the logical endpoint of cascading defaults and collapsing confidence. Those who hesitate will be left behind, holding paper in a world gone irreversibly real. And, look, I'm not a financial advisor. I'm not giving financial advice. I said I like silver at $20 per ounce. I'll tell you this right now, at $42 per ounce, I still love silver. I have a feeling you probably do too. And I've said for months and months and months, and it's not just me, there's a lot of other top analysts who are saying the same thing. Once silver breaks through that 42, 43, 44 range, it's a pure rocket ship to $50 per ounce because there is no resistance up there whatsoever. Let's go take a quick look at what's going on in China with the silver price. And there's something very interesting I want to point out to you about this. This is from our friend, the Oriental Ghost. He gives us the prices from China on a daily basis. These are the Chinese market closing silver prices on Friday. This is the SGE, the Shanghai Gold Exchange. There's silver right there, AG. Look, it's pretty close to where we are. Now, again, that was before our market on Friday, which had a very, very good day. It'll be interesting to see what happens overnight on Sunday in the Chinese physical market. But I want you to think about something. As the Chinese take over, as the Eastern countries, India, China, Russia, take over the pricing mechanism, the power in the precious metals market, it's actually a good thing. Typically, what we had seen is that in the Chinese physical market, the price was much, much higher than what we had in the spot market in the United States. We're going to see a day where those prices converge, and that will actually indicate to us more and more and more that the Chinese and the Russians and the Indians are taking over control of pricing silver, and the same absolutely can be said for gold. Let's go look, though, at some astounding data that we have out there in regard to what is happening on the U.S. debt situation. But then we want to look at the paper to silver ratio as well. Look, guys, big news. We've almost reached $37.5 trillion in national debt. This interest down here, the interest number, where you can see my yellow cursor, is the one we really want to keep our eye on. That has grown larger than the Department of Defense budget, but will only continue to grow higher as, number one, the U.S. national debt grows higher, right? And we just recently celebrated getting to $37 trillion in debt, but also as fewer and fewer buyers emerge for all this debt, the interest rate will go higher and higher, also driving the interest expense higher. It's really, truly a debt spiral, truly a sad situation that you and I didn't create, and the founding fathers of the United States are rolling over in their graves in regard to. Right, I can't draw on this side of the screen for some reason, but if you see my yellow cursor right there, guys, paper to silver ratio, that COMEX that we talked about earlier, currently sitting at 361. That means there's 361 paper claims for each 1 real ounce of silver. The other number we like to look at on this graph is the dollar to silver ratio. That indicates the growth in M2 money supply, the amount of money that's being printed through the M2 money supply for each 1 ounce of silver that's being produced by the world's silver miners. All right, let's talk about big news this week. We've got the Federal Reserve on Wednesday will issue their interest rate decision. We're going to go look and see what the markets are telling us we should anticipate. It's pretty much a done deal, all sewed up, that we're going to get at least a 0.25 point cut. I think there's a much higher chance of a 0.5 percentage point cut than the markets are giving credit for. But let's go out to the CME group and see what the markets are telling us to expect at this point. And as you can see here, the next FOMC meeting is in 3 days. That will be, I don't know, Wednesday. Here we go. 93% chance of a 0.25% cut. You can see that on the right-hand side, and a measly 7% chance of a 0.5 percentage point cut. I believe those numbers in reality, the odds of a 0.5% percentage cut, much, much higher than what we had. Let's learn about the COMEX. We're going to go back to the Silver Academy Substack. They put out some great info. They put out some insightful information about the COMEX and what is going on there. Because again, guys, a lot of people are calling for a potential for a silver squeeze. Let me look at you. I want to look you in the eye and be able to smile when I say this. We don't want a silver squeeze. We want a silver squeeze. That's something unique to Ron's Basement, to us basement dwellers. By the way, thank you for being here. Thanks for giving me your time. Please subscribe to the channel. It is free. Most importantly, I want you to feel like you found a friend, a home away from home. You know where to find me. Please come back. Okay, we don't want, and this is ours, we made this up. We don't want a silver squeeze. We want a silver squeeze, a long, drawn out, not a spike, but a long, continued, drawn out squeeze where the true price of silver is discovered by market forces. And I believe that we're already in that. And the COMEX and the LBMA can be a part of that. And I believe they are right now. We're going to look at some data about short positions on the COMEX and a number of other things. But again, we're going back out to the Silver Academy. It says gold 5x, silver to 10x. Okay, U.S. debt explodes. But he talks about derivatives. Okay, and derivatives are what are traded on the COMEX and the LBMA. In case you didn't know, a derivative is a bet or a contract that gets its worth from the price of another asset, such as a commodity, stock, or currency. If the price of silver goes up, the value of a silver derivative, like a futures contract traded on the COMEX, usually goes up too, and vice versa. How the COMEX silver market works. The COMEX is the major U.S. market for trading silver futures, which are derivatives. Trading on COMEX mostly happens with paper contracts and not physical silver. Remember what we saw on the U.S. debt clock, there's like 360 derivative paper claims for each 1 real ounce of silver. This means traders are buying and selling promises for silver delivery in the future, not the actual metal itself. Why many holders don't actually get silver. Most silver contracts on the COMEX never result in anyone getting real silver. About 99% are settled with cash instead. Give me 1 second here. Make sure we're on the right screen. At times, there can be hundreds of people holding paper contracts, all believing they have a claim on the same pile of silver. If they all wanted their physical metal at once, the COMEX would run out since there isn't enough silver available for everyone's paper claims. Yeah, to the tune of about 360 to 1, as I understand it. Big banks and their silver short positions. Recently, U.S. bank bets against silver, their short positions in the COMEX, have collapsed, meaning they no longer hold as many bets that silver price will go down. This shift may trigger major price changes if investors demand physical silver instead of settling for paper promises. And at the bottom line, at the end of the day, gold and silver are the financial watchdogs. So there you have it, guys. I thought it would be good for us to do a little review, right? The COMEX, it's derivatives, it's paper. We forget that. Like 360 to 1. I hear some people say 400 to 1. There's a lot of numbers thrown around, but the bottom line is that COMEX silver price that all the big TradFi markets rely on is really make-believe, right? The silver doesn't really exist except for 1 out of 360 of the ounces that are being traded. Now, if you want to get your hands on some real silver that does exist, I'm able to be down here because of the support of sponsors like First Mint. See where I'm pointing? Right there, First Mint. They are a silver mint in Las Vegas, Nevada. They are part of First Majestic Silver. So First Majestic Silver mines the silver in Mexico, ships it to the United States, Las Vegas, Nevada, to First Mint, where it's transformed into world-class silver bullion products. Products like this beautiful 5-ounce bar. And I'm going to have some new bars that I'll be showing you in the coming weeks. They have incredibly beautiful silver products there. You guys are giving me the best feedback. I really appreciate it. But I want to point out to you, they've got a sale going on. I'm going to go out to their website. I want to show you something special going on with First Mint right now. And that's their Las Vegas round. That's not it. Oh, there's their Hail to the Chief round. These are all unique to First Mint. Here it is, $1 over spot on all First Mint brand silver. So you can go here to their website, firstmint.com. Check that out. They have free shipping on orders over $199. They have a great selection. Most importantly, they're wonderful, beautiful products, and they're a company you can trust. They're owned by First Majestic Silver. That's Keith Neumeyer. Everybody knows Keith Neumeyer. He's been in the metals business for decades and decades. Please support First Mint because they support me and allow me to be down here providing the Ron's Basement content to you. All right. So next week's the big Fed meeting. I think we're going to get a 0.5 percentage point cut. Okay. I could be wrong. I'm going out on a limb in saying that, but for sure we can see a 0.25 point. The great reversal. And when you look, by the way, at what has happened over the last several major Fed rate cutting cycles, the price of silver and gold have exploded during each of those. It's hard to think that could be the case again now, especially with gold and how well it's done. But if gold performs similarly to how it did at the beginning of other rate cut cycles, we could see that $5,000 gold, right? $50, $77 silver, much, much quicker than we imagine. The miners are undervalued. And this, when people come back to the gold and silver mining stocks, that will be good for the whole gold and silver ecosystem. It'll bring more money into the entire precious metals ecosystem. And I'm telling you, the miners are so undervalued. Let's go out and take a look at a couple of pieces of data that I have for you. Here we go. Make sure we got you on the right screen. And we do. Okay. This came from Metals and Miners. Just one chart I want you to look at. The great reversal. Why gold miners are about to reclaim their crown. And take a look at this chart. This chart does not lie, okay? The white line is the gold bugs index. That represents the price of the gold miners. The yellow line is the price of gold. As you can see, relative to each other, all the way from 2000 to 2011, which is a very similar period to what we're moving into now, the gold miners were significantly higher valued than the price of gold. But look at what happened around 2013, where you see the white line. Again, that's the gold miners. Look at that gap between the price of gold and the gold miners. That's when we were buying a lot of our gold miners. But the incredible thing to look at is where this gap has gone now. I'm going to draw a red line there and a red line there. And I'm going to color that in. Look at that gap that we have now between those two levels. That is this was a gap, no doubt about it. And don't forget, there's a big period of time where this white line's above the yellow line, like over here back in 2008 timeframe. But look at that massive disparity between the price of gold miners and the price of gold. That will be fixed, right? That will come back into equilibrium. That would either mean that the gold price would need to crash, which we don't think is going to happen, or the price of the gold miners absolutely explodes and catches up, which I happen to think is what we have to look forward to. Next piece of data. Man, it just keeps coming and coming. Here we go. The GDX. Sure we got you on there. There we do. The GDX, which is the gold miners index, finally best its record high set in 2011. And there it is on the chart there. You can see right over here, we finally surpassed the previous high, which is back in 2011. However, it's got some interesting information. The GDX ETF finally bested its record close, which was seen an astonishing 14 years ago. Gold stocks forging back into record territory with fuel, much bullish financial media coverage and trader interest, leading to more buying. And this record breakout will will remain or remains earlier in gold stocks revaluation. So we're still early in the process, as miners' fundamentals are radically better today than they were 14 years ago. And that is the truth, right? Not only did the GDX finally catch up to where it was in 2011, okay, but on top of that, the fundamentals, the balance sheets, everything about the miners is way better today than it was back in 2011. Seemingly an eternity ago, in early September 2011, the GDX surged to an all-time high of $66.63, capping, I wanted to point this out, a 307% rise. So we may think, oh, the GDX has done great. It's over. Guys, the GDX right now is only up 100%. I know that sounds strange to say only up 100%, but in previous bull runs, we've seen like that one, the GDX went up by 300%. And we know some of the mining stocks, and those are the GDX is the big mining stocks. A lot of the junior mining stocks can do even better. What a great entry for me to say thank you to a great junior development stage mining stock company, First Mining Gold, who sponsors Ron's Basement. I held the stock long before they sponsored my channel. They're a development stage company with 2 multi-million ounce projects in Canada, Springpole in Ontario, and Duparquet in Quebec. Gold in the ground in Canada. Big projects, 2 of them. And the big mining companies are going to be out looking for big projects to fill their pipeline. Because like I said earlier, the big miners, their balance sheets are in much better shape right now. That's because over the last decade and a half, they were spending their money on things like paying down their debt. They weren't necessarily spending a lot of money on exploration and development. So as they need to replace those ounces of gold that they're pulling out of the ground, they could likely look to companies like First Mining Gold, who has 2 multi-million ounce projects in Canada to fill that need that they have within their future production pipeline. You can learn more about First Mining Gold at firstmininggold.com. And thank you to them for sponsoring the basement. One final thing we want to look at, again, interesting data that I didn't realize this was the case. Peter Spina pointed this one out. Guys, we are in a gold bull market because he says it right here. Gold has hit record highs more than 30 times this year. 30 times the gold price has gone down and then back up to all-time record highs. Man, we are in for a wild, fun ride when it comes to silver and gold. I mean, we've waited a long time. Some of us decades, some of us for years and years. Maybe you're new to the gold and silver sector, but I'm telling you, there's a lot for us to look forward to. Before I forget, I do also want to say thank you to Dirty Man Safe for supporting Ron's Basement. Ron10 is your discount code. These are safes that you bury in your backyard. You get to be like a pirate. Really cool products. This is the Dirty Girl safe. And if you open it up, I'll show you what's inside. There we go. Right? You can store stuff in there. I'm not going to ask what you're going to store in yours. Maybe some people want to put some precious metals in it. I don't know. But like I say all the time, where did the pirates hide their treasure and where has it stayed safe for 1,000 years, 500 years? In the ground. Where did Mother Nature put all the treasure, silver and gold? In the ground. So it's okay if you have a safety deposit box. It's okay if you have a safe at your house, but you can also diversify a little bit and store some in the ground, safe from all forms of natural disaster, fire, flood, whatever, maybe not a backhoe, but everything else. All right, guys, thanks for being here. It's going to be interesting to see what happens this week. Big week with the Fed, big week with us breaking out potentially with silver. We'll be here together. We'll make it through it all together. Hey, don't forget, please subscribe to the channel. I'd love to have you back in the basement. Take care of yourself, okay? And I will see you